And so we wanted to focus on this very different model that we said, well, in this case here, finding a property like at Montauban where it had this low-hanging fruit, unbelievable low-hanging fruit, and a million metric tons of tailings, very simple. It's above ground, no cost exploration, no risk. You can walk the property, you're walking on it, you touch it, you see it. You're not trying to figure out where it is. And a simple process, just process the material and cash flow. And then from your cash flow model, then take the money and invest it in the ground. And we focused on that model. We worked with the municipality and we said, okay, we'll work with you guys to remediate, restore. And then, our game plan is to migrate into the ore body that was there. And again, low-hanging fruit on a surface crown pillar that was phenomenal. An outcrop that just comes out of the ground. We can see it, we can touch it, we walk on it. We don't have to spend dozens of millions of dollars trying to figure out, where it is, how much we have. Literally, we can see it, we can touch it again, and we want to be able to start tapping into potentially what is underground.
For disclosure purposes, our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site or this podcast should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. This podcast is for entertainment purposes only. Please read all disclosures and disclaimers at the end of the show. For disclosure purposes, ESGold Corp is a paid-for featured client on the Investor Ideas website. Paul, thanks so much for joining us on the show today. For investors and followers that are new to the ESGold story, do you want to just talk a little bit about the history that you have, especially with this project, and how ESGold came to be?
Yeah, absolutely. Thank you for having me, Callie. We go back to 2010. That's how the story began. We put together a group of family, friends, of investors, and back in 2010, basically, it started with the idea of building an asset that with family, friend round money that we can basically fast track it and get a mining project up and running and in production and create value for shareholders for a long time. And the idea was creating like basically a retirement fund for these people. And this just came about from my background being a little bit upset back in the consulting days, working with different mining companies and oil and gas companies, and what I refer to as rinse and repeat, raising money, drilling, hit, miss, another round of money, hit, miss, and basically not really creating any shareholder value. And after a period of time, we do consolidation, we roll back. And so was years, a few years of that. And some of our good friends also lost a lot of money. And they said, man, every time we invest in any of these companies, there's never been a company that I've been involved with that actually took it all the way to the end and produced anything. And we were able to make, some good money over time. That's how that came about. And we contacted a friend of mine. I said, look, I'm looking for a property. Let's get a property that, we could fast track, get it into production and build from there. And let's actually produce something.
Well, I think investors will love that start to the story. Talk to us a little bit about Montauban, because how you're doing things is a little different than your typical junior. One of the things that I really like is your typical junior follows the Lassonde curve, and you guys crush that narrative. You're doing things, and it's very interesting, and I feel like investors would love to hear more about that.
This model of drilling and waiting for result and trying to hit something and then build from there, like I've started to see market pulling away from that in the late 2000s, like seven, eight, nine, and I started to see that there wasn't really an appetite for that. And so we wanted to focus on this very different model that we said, well, in this case here, finding a property like at Montauban where it had this low-hanging fruit, unbelievable low-hanging fruit. And, 1 million metric tons of tailings, very simple. It's above ground, no cost exploration, no risk. You can walk the property, you're walking on it, you touch it, you see it. You're not trying to figure out where it is. And a simple process, just process the material and cash flow. And then from your cash flow model, then take the money and invest it in the ground. And we focused on that model. We worked with the municipality and we said, okay, we'll work with you guys to remediate, restore. And then, our game plan is to migrate into the ore body that was there. And again, low-hanging fruit on a surface crown pillar that was phenomenal. An outcrop that just comes out of the ground. We can see it, we can touch it, we walk on it. We don't have to spend dozens of millions of dollars trying to figure out, where it is, how much we have. Literally, we can see it, we can touch it again. And we worked with the municipality and said, we're willing to work with the municipality, provincial governments, restore, remediate, and we want to be able to start tapping into potentially what is underground. And in this case here, like even right now with values gold where current prices, that low hanging fruit, again, surface material, tailings, and this surface ore body, 400,000 metric tons. We have the capacity right now to generate on the first 4 or 5 years close to $350 million on this low hanging fruit with almost zero cost. Be able to take that money and invest and build real value going into the ground. And that was our whole focus, like just keeping things very simple.
You just announced, I think, at the end of May, that you just launched your final concentration tests ahead of first production. Can you talk to us a little bit about that? Because I think what's interesting is that you're using the Humphrey spiral and that you might actually be able to produce like and do everything on site.
There's in the industry a pre-concentrated pile, and in our case, this pile is grading 4 or 5, about 4.5 to 5 times the the balance of, call it, 950,000 metric tons of this homogeneous pile. And so what we're able to do is because of the pre-concentration levels being, approximately 1.3 grams per ton gold, 140 grams per ton silver, our mining mineralogist engineer said, we have the opportunity here to be able to include, like another one of these simplified process, very, very low cost. And it's a series of free spirals where we're able to create a concentrate. And if we're be able to get that concentrate high enough, then we're able to literally pour the concentrate directly into a wabi furnace that we have on site and literally pour doré bars very, very quickly. And focusing on simplified solutions and keeping on track with, what is the simplest way to generate cash flow.
Can you talk about the anomaly that you found? I think was that in May again, or early May or end of April, that you found at the southwest side for Montauban as well?
It's a little bit premature. About a year ago, we were informed Andre Gauthier, who's on our board, an unbelievable, world-renowned seasoned geologist, and Claude Duplessis from Gold Mines, who's a consultant geologist. They had just studied the area and they said, look, there's a lot of information out there on the site. We should be staking these areas here. We ended up like collecting the data and we saw that there was massive anomalies on very, very high percentages of sulfides, which stood out like a sore thumb, like really to certain areas of the property. And it was in line with that Grenville rock that the geologists were talking about. And I know a bit about geology. I know somewhat, but these guys like are experts, and I couldn't believe it that all this territory was still, let's say, unstaked. So we put a plan where we were very careful because we were saying what we were told is we need to be careful. If we start to stake, there's people that follow these things and there's patterns or whatever, and then they're gonna they're gonna come in there and start staking the stuff while we're trying to stake it. And in fact, there was three or four claims in the middle of this whole package that we ended up not being able to stake it because I don't know how they do, but they caught on and they started staking. We were fortunate. We did it over a 4 day period and we were able to go about it quietly. And what we're seeing, and we were told, is the outcrops and the trend, the way things are trending, there's something we're going to see. We're expecting the ambient noise tomography report to be out in the next couple of weeks. And if it's in line with what everybody is thinking, and these people are a lot smarter than I am in mining, we're going to have a nice surprise for shareholders.
Well, that's very exciting. And just to clarify, you have done the 3D modeling so far and some of the surface imaging through there?
From surface to approximately 800 meters. This property here was never mined below 200. I think at the deepest parts maybe it's 250 meters. So we're well below that surface work and extrapolation that was done on the first 250 meters. The thought is, and the theory is, being a massive VMS system, the feed is from underneath. So the work is all completed. We're expecting the report to be out by sometime in next week.
Can you talk to us a little bit about some of the costs that you've not had to incur and some of the ESG standards that you've really built into ES Gold? Because I think that's, I mean, look, mining investors are not here
Yeah.
on the clean tech side, but I feel like it's always a positive to add in.
Today, you need to be socially responsible. It's beyond even being socially responsible because now, I mean, the government's with the new mining acts, they've got a whole bunch of checks and balances in place. It's a little bit of a, for people, it's a challenge, but it's not, this isn't rocket science. I mean, that material that's left behind, it's an aggregate. That's how we look at it. That's what we refer to it in the construction industry. It's an aggregate, it's rock. Now, if you have a rock that is processed in a quarry, you have different granular sizes, 2 inch, 4 inch, 8 inch sand. There's a value to it. So that rock there that was processed, that is a waste. It's considered waste. It's considered waste because the way it was treated. If we are able to reprocess it and neutralize it, well, now you have a material that's worth a lot of money in the industry. And there's actually a shortage of material. And what we're able to do is through the neutralization process, we're actually able to create a byproduct that is 100% reusable. And it makes us full circle 360 ESG because it's a material that can be reused in the construction industry. And it puts the company in a position, and a lot of other companies should be looking at this. And I think there is going to be a buzz, and people are going to be watching like what we were able to do. It puts a company in a position where you don't have to manage a tailings pond anymore. And the management of a tailings pond costs money. Bottom line, there's a negative value on the balance sheet. And our whole plan, our whole process from day one was if we're able to neutralize the material and we reprocess, capture, recover the gold and silver, and then through a neutralizing agent, we neutralize a product, and we're able to make construction byproducts and use this material as a backfilling material for road construction base materials. Well, it's full ESG and there's an additional value, and we don't have to manage, even more importantly, manage a tailings pond. And we were able to come up with a formula using a polymer, a biodegradable polymer. And we began the testing 2 years ago, and we have a formula where we're able to now create products, byproducts, construction byproducts with this material that we're going to mine. So it's an integrated business within a business because it's removing that that footprint, and it opens us the door to offset carbon credits.
Out of the 40 mining companies in production, maybe you're the 41st that's coming in, which is exciting to see. Can you talk about, again, one of the things that I really like is your share structure and how you've put together the deal? Because talking about shareholder value, a lot of
Yeah.
times you see maybe not so favorable structures as, exploration costs a lot of money and it is the nature of the beast. So can you
Yeah.
just talk to investors a little bit about where you guys are for cash with in the bank and then your burn rate and then your share structure?
Our game plan is to be below the 100 million shares, like fully diluted and be cashed up. And we are right there. We're on track for that. We're working on some equity financing, and our game plan, the strategy is to couple the equity financing with a non-dilutive instrument. We're looking at a line of credit. And the game plan is to just make sure we have a good balance of some equity and the balance in a non-dilutive financing instrument. And the reason for that is very simple. Because we'll be able to get into cash flow very quickly, we'll have the capacity to pay back very simply. And so it's a choice. It's not easy, but I mean, if we had a $2 share price, a $1.50 share price, whatever it is, yeah, it's a lot easier to make the decision and do a bigger equity raise. But we're able to have the structure we have because we've been very careful, especially over the past year. When we did share issuances, equity raises, we were really raising, okay, what do we need for the next 2 months, 3 months, and that's what we're going to raise. And we're going to wait to, a little bit like a wolf, like we'll go for the kill when the time is right. And the time is when we have, a more favorable share price. The run we're having right now, I think, is a testament to that. Um, for me, shareholders are the most important. They're the backbone of the project. It's their money we're managing. And yeah, we need to build a project, but at the same time, we're trying to build wealth for them. And so it's easy to do rock and roll financings. Yeah. That doesn't bode well though, and you get a lot of people upset. I'm a big shareholder. I've got my money in there, family, friends, and so I think you really have to be reconnaissance of that and just pick your areas where you're going to do the financings and, work with the people that are around and try to figure out, okay, what's the best strategy here? It's 6 million in a little bit under 6 million in capex, 1 million in opex, and we're going to be in a position where, we've got 5 million cash in the bank with a $5 million line. So I think if we stay on course the way we're going and just focus on getting in production and raise the minimal amount through equity, take on debt, but it's a balance. This is what's going to work. And we're seeing it now in the market. This is a testament of just keeping things tight. I mean, it's easy to blow up a share structure, but where do you go after that? I mean,
I feel like there's a lot of eyes going towards ES Gold. Looks like you guys are up leveling every few months, basically. Do you want to just talk a little bit about some of the additions you added to the board as well? Because, you brought on some great names, and I just feel like the story just keeps getting more and more exciting.
a little over a month ago, we were very fortunate to be able to bring on the board of directors Peter Espig, the unbelievable, a phenomenal person, unbelievable connections on a global scale for financing. And I consider ourselves very fortunate. Not easy to get people of that caliber involved. And the discussions we've been having with Peter, for a junior, it's just a complete, like it's another planet, it's another level. Um, People with real solutions. And one of the big problems with juniors is, you get to try to finance, and everybody says, yeah, we could finance. And then, you waste a month, 2 months, time goes by, and you think you have a financing deal, you think you found the right partner. Next thing you know, it's these different ways of toxic finances that are out there. And Peter eliminates that whole process of basically just wasting your time spinning in circles and not getting anywhere. He has unbelievable contacts, real people that are ready to work with a company that has the potential to build a project and build a company and build a platform. And so these are the kind of people that we've been speaking to in the past month, and it's been unbelievable. It's just like game changer for the company. And it's brought us to a position where we're going to be adding to management at the officer level. And again, we're in discussions with certain people, and we want to be able to bring on another person who could, like a Peter Espeg, in the financing space that's able to really push this thing forward. And it's not easy to bring on good people with limited cash, and it's everybody, trying to get everybody to drink that Kool-Aid. Hey, we got to keep things tight. We don't have a lot of money. You're worth $500,000 a year, but we can't pay that. How could we, take money from shareholders and pay these big salaries, and we're not advancing the project? So it's not easy, but we've been we've been unbelievably fortunate in the past 4 or 5 weeks, and now we're really in a good space. We're talking to the right people.
Well, I think your project and your dedication speak, volumes for investors and the people that you're bringing on to your team. So obviously, I feel like there's a lot of people that believe the story. Paul, do you want to just mention anything in closing to potential new shareholders or new followers that are checking out the ES Gold story for the first time?
We're ready to go. We're pretty well financed. We're going to complete equity financing with a line of credit to, again, keep in line with this strategy to keep a very tight float. Game plan here is to get up and running within the next 6 months and start generating cash flow, grow the model. It's a scalable, replicable model. The next 6 months here is going to be very, very exciting for shareholders that have been there for a long time with us, that 15 years, some of them, and new shareholders. It's going to be an unbelievable ride for them. It really is. Like, I'm really, really excited. Um, we were actually talking about this today, and with other members of management, and it's like, news, we're getting great news every day, and we're moving forward. Bring on the good news. Don't stop it. So there's a lot of excitement. There's a good buzz. People really like what we're doing. And we're getting compliments. We were at the Northern Mining Show in Quebec, and they're saying, whatever you guys are doing, just keep it up, because it's like, this is really, really exciting. So, we have an unbelievable team. Like, there is unbelievable talent and expertise from within and exterior. It like we are really, really well surrounded. So it takes a big team, and it takes a good team, and I just like we have all the elements, and shareholders are I think the old shareholders that have been there for a long time are going to be rewarded for their patience, and the new shareholders coming on board, um, wow, it's going to be exciting for them.